Good turnaround Tuesday. Face Warriors. How's everyone doing today? I hope okay. Hope you had a great day yesterday with the indexes falling apart. One of the largest range days in a while. So sometimes in the summer, we get lulled into complacency that nothing's going to happen. And really, you can have a lot of exaggerated moves because of less liquidity in the market. Doesn't take as much selling or buying to move the market during the summer. So, I'm a believer that, really to be there for the good times, you have to be there all the time. I know Blake's like that. Blake's always in the market. And in fact, just quickly, from the week ahead video, buying the euro, and we got up to Blake's number at 1720 and came off pretty good. So he definitely identified that we were going to have a pop early into the week, gave this number at 1720, and now we're coming off. What to do here? I'm never afraid to say I don't know. Favor buying a break here, but I thought I'd share a teaching. Hi, Bob, Craig, everyone doing okay? So it's a teaching that's simple, but overlooked by a lot of traders. And this is why it's so important to look at your weekly charts, especially over the weekend when you're doing your assessment of different instruments. So last week, euro had a reversal candle, right? Everyone see this? And last week, although gold recovered, where are you, gold? Okay, although gold recovered, it did not have a reversal week, okay? So in talking to some traders over the weekend, I said, this makes the euro the preferred long and gold the preferred short. So gold didn't reverse, and we're about $9 lower on the week. And the candle in euro, although we're kind of back to unchanged on the week, if you had paid attention to that weekly candle, you still made money being long. Give me a Y if you get it. So you have to look at your weekly candles to give you your preferred longs and shorts. So the weekly candle made euro the preferred long, buying on weakness, and the week close in gold, although gold had recovered during the week, it wasn't as strong as euro and did not post a reversal week. Give me a Y if you get it. And how about a Y, a promise that you're going to pay attention to weekly candles to give you a hint as to, what you're going to be looking to trade the following week. Everyone with me? Gold to third drive? Okay. On 4 hour. Well, let me take a quick look. I had it as a 2 when I was looking at it earlier. 4 hour. No, I'd say this is 1. And now we're trying to form a 2. Nitish. Okay. I wouldn't count this as drive 1, or this is drive 1, because you have to start it from, I'll give it away from the confirm low. Okay. So this is the first non-confirmation. If they turn it here, you're very welcome. And I had one more lesson. It had to do with the stock indexes. So let's go to that. Everyone on the team had identified if we took out 2740 in the S&Ps, look out below. So we got that breakdown. So now if you're bearish, we shouldn't close back above it, correct? All right, so I actually think, and I was showing this line last week, that 26.25 is viable. I've seen counts down to 575, and the most bearish counts takes it under these lows, like 24.5. Probably some type of equality to this. So if we get a quality of this, probably this would be like a C wave, and then we have a melt up going into next year. So that's the S&Ps. They look negative to me. NASDAQ, false breakout, right? And something I talked about and prepared people for were, was the third drive. 1, 2, 3 up here. This was actually done, I think, Thursday night. And we came in steady, and NASDAQ put in kind of a reversal week here last week. So false breakout there. So it looks negative to me. I don't know if they're going to be able, especially if we take out the 50-day here at 69.42. Now, there are seasonal tendencies in equities here. At the end of the quarter, and money managers are going to want to have the best performers on their books for their clients to show their clients they're in the best stocks. I don't know, it's kind of like, I guess window dressing. Doesn't mean anything how long they've held them or where they're in from, but sometimes that creates some support, a rally into the end of the quarter, which is this week, I believe, or maybe Monday. So possibility of some type of recovery in the S&Ps and the NASDAQ. And then the last lesson was, I remember Steve Volge was going over the Russell. And this, you guys have to write down in your book. It won't happen a lot. Write it down in your trading book. It won't happen a lot in FX because of its 24/6 nature, not a lot of gaps. But I remember Steve was talking about the Russell here. And I said, Steve, this gap, it filled it the next day. It's an exhaustion gap, meaning the market is tired, it's exhausted. And we got hit pretty hard in the Russell. Okay, the Russell's still the strength. People will call this a break to buy back to previous highs. Probably is, but it's still, 160-ish. So write this down. When you see a market that's been in a continuation uptrend, you've had yet a, few little gaps on, because of the 20, they close this market. There's not that much aftermarket trading, especially in IWM, because it's an ETF. So, on ETFs, you can play some gaps. That's an exhaustion gap. The market was tired. The market sold off. Everyone get that? So now you know what an exhaustion gap is. I feel like an exhaustion gap by Fridays. Okay, I'm an exhaustion gap by TGIF. How about you guys? All right, now this is also a critical week for people here in FACE that are just getting our free daily webinars, which I think are the best on the net, as good as some that people pay $200 a month to be in, with a great analysis provided in an hour and bonus great guests. I have another guest that's very popular. People love this guy. Steve Anton will be with us today at the Pivot King. So stick around for Steve Anton. I'm sure some of his fans are in the house. Looks like Michael yesterday was a hit. He already has about 300 views on his recorded interview. So this is the week you guys have to lock in rates, okay? You have to subscribe this week so that you get the value others have had for the last 2 years, and it'll never go away for you. It'll never go away for you as long as you're part of our family, our trading community. So time to lock in your subscription price. The clock is ticking. Okay, and also important for you to get in touch with these guys. I was walking through Forest Park one day in the merry, merry month of May. I wanted to talk to Justin, but instead I got Trent. And to the greatest broker in the universe I was sent. You're locked in forever, Andy. It's like Hotel California and the mafia. It's like being a trader. You're locked in forever. In the mafia, you could never leave. Go ahead, try and stop trading. Tell me how long. Tell me how long it lasts for you. I think my biggest streak was, I don't know, 6 months. I went into implant dentistry. Yeah, same old Dale. Same old Dale, huh, Joe? All right, so let's have a great day. You know, just because, and that's the beauty of ForexAnalytix, since, you know, I don't see anything actionable. You know, I've been waiting for this downside action in the S&Ps, preparing myself for it. The only other thing that's kind of on my watch list, guys, and it hasn't manifested yet, is something I never trade, would be getting a third drive above 9 on US dollar SEC. Okay, there's your daily. I don't believe it'll confirm. 4 hours corrected enough that I don't think it'll confirm. Looks like it'll go there. This kind of looks like a bull flag to me. 850, so a point from here. Well, they'll take it to 960. Anyway, I'll be watching that. And crude, you know, I'm looking at this. I do think we'll take out Friday's high. But when you look at this, there's still a chance that this is a failing rally. You know, I love Kirk Spano. He's a great guest, but, you know, he's saying that 61 crude is just a dream. It may not be a dream, because if we top between here and 70 and we have equality here, that's where we're going, Kirk. So it does look like we'll make a new high, just like USD SEC. To me, it looks like a flagpole. So looking to see what it does over Friday's high, maybe up around the 70 range. And if it starts meeting that criteria. Okay, Oitoy is buying EG. You know, I stopped looking at it after the last break. I haven't looked at EG in a while. Let's see what you got there, buddy. Yeah. Threatening the upper end of the range now. Have this, after this day. So you always have these days and then you have no follow through. It's still, you know, looks like it could break out, and I've been saying for a long time on the weekly, it still looks incomplete to me. So good hunting on that trade, Oitoy. You know, a weak dollar would help you with, of course, euro having the relative strength. Okay, so that's all I have to say for now. So wondering what Blake is thinking, if he's watching. Who's playing right now?
Nobody.
Oh, wow.
Hey, yeah, the game starts in, I think in like an hour and 45 minutes, I believe.
Perfect.
Yeah, so
yeah,
we got a couple of good games today. So what's happening, Dale?
That's about it. Pretty nice break under that 2740 S&P level.
Yeah, it was a really good breakdown actually in the S&P. We cracked it, but you know, it's been at this point in time, it's been limited follow through for the S&P. I mean, we broke through obviously, and you know, we had a nice flush, but we haven't continued lower yet, and you know, surprisingly, it's the S&P is actually still holding up pretty well.
Yeah, you could get that window dressing, Blake. I know portfolio guys that going into the end of the quarter, they like to add all the high-performing stocks so that their customers think that they've been in them all quarter.
Yeah. So we'll get some window dressing here into this week and as we get into next week. So I think downside right now is fairly limited, but just looking at equities right now, I'd probably be just knowing the time of year that we're in. You probably want to sell rallies.
Yeah.
That would be what I would think.
It's going to your red line at the bottom in the next month.
Yeah, I think that's possible. I think it's possible we get back down here and get down towards all this, this support through here, somewhere down in that neighborhood. I don't think that would be uncalled for at this stage in the game. It looks very, very possible. And as far as how that affects FX, the dollar yen. The dollar yen spiked up pretty high yesterday following the comments from Navarro, basically stating that let me remove that the market was overreacting, and the dollar yen actually spiked up pretty good. You can see how we spiked up pretty good, stopped a lot of people out yesterday when that happened above the 110 level, and then we slumped again last night. And I was like, man, that was a real
stop hunt.
Yeah, it was just a screw job, just really it was a stop hunt like nobody's business, and we came all the way back down in Asian trade. And it's been kind of choppy, and I think that I was sitting here watching this broken trend line thinking, okay, we're gonna follow through, even though I didn't short the U.S. dollar, Japanese yen. Hold on, my office very loud. Hold on. Okay. So anyway, anyway, so the U.S. dollar, Japanese yen just kind of been floundering around. Then yesterday it spiked back up and then back down again. And I've been leaving it alone, but I will tell you that if we break below this 109.20. That changes a lot of things for me. I'll be, at that point in time, looking for a I'll be looking for a bearish move. That's what I'll be looking for personally. Now, as far as the euro dollar, you talked about the euro dollar. We rejected this 117.20 level, and that's as I expected. I actually shorted it yesterday at 117.08, and I closed it this morning when we were at 57 or 59. I closed it at 58 actually is where I closed it. So, shorted the euro, closed it out when it spiked down here as I got up. We're bouncing a little bit, but now, when you said, I don't know what to do right now, that's exactly how I feel. It's like, I don't know what to do. That was a gimme trade, obviously is something that had been planning out since over the weekend. And I took advantage of it. I hope some of you guys took advantage of it. I know we didn't get up to 21, the actual number, but I was, trying to sell it ahead of that number a little bit too. So I actually closed some of it last night before I went to bed. Unfortunately, I would have had a much bigger position going into overnight, but I'm like, I hate being too aggressive in a position when I'm sleeping. So that, I took that one off the table. But one of the things that's actually developed right now is the U.S. dollar Mexican peso is pulled back towards 1790. Now 1790 is the big breakout point here. Okay, I am long. I'm long at 1990, 19.90. It was this morning. It rallied all the way to 20. I should have taken it off, obviously, when I was up there, but we came right back down towards support here. And this is where I want to own the dollar Mexican peso. But the guys in our chat room, and by the way, if you're a ForexAnalytix subscriber, you get involved in this. This is our community. We have 84 people in there right now. Usually we have anywhere between 70 to 100, and you guys can all say hi. You can see there's a bunch of traders in there. you know, we've been talking a lot of World Cup actually over the last few days. Anyway, gee, that's pretty funny actually. There's Steve, there's Benedict, there's Ziggy. Anyway, one of the things that I want to put that back up here that we've been talking about as far as the peso goes is because I'm buying some here. A lot of people are waiting for the 1980 level, which is the 38% retracement of the entire move, which I think is it is doable. I mean, the dollar peso is actually trading pretty heavy right now, so the chances of us getting back here towards 1980, I think, is a realistic expectation. I hope it doesn't get down there. I hope I picked it up at a good price, but you know, we obviously can make it all the way down there. Ooh, wow! All of a sudden, the euro started spiking up again. Hold on. The euro's spiking up here. Pound. Pounds at not new highs of the day, but highs of the session. Aussie just spiked up. Actually, precious metals just spiked up. I'm looking to see if there's any news. Nothing I can see. Kiwi's spiking up a little bit. Dollar Canadian just pulled back. So
seems to be a dollar move, but I can't see the reason.
Yeah, thanks, Delius. I don't see a reason either. It just, you know, yeah, just like a dollar move came out of nowhere. Maybe a little bit of just dollar selling is just what it is. I think there's the peso actually hitting new lows of the day. Hey, maybe the dollar peso that brought in some moves. Here's the dollar yen. It's come under a little bit of pressure. Yeah, you know, I don't know. It's just a little bit of a dollar move coming on. And actually, if you look at gold and silver, yeah, there's gold, silver. Silver might have actually posted a false breakdown. I bought silver a little bit earlier. I had a really tight stop. I got stopped out already, but it was very tight. It was like 2 pennies or whatever. But you know, we might have actually just did a false breakdown in silver here below that support. And gold, Steve said there's a bunch of confluence down here. I don't really see it, but you know, he might be looking at this trend line right through here, something like that. I don't know, not really too sure.
By the way, Blake, a couple of our friends are telling us that the bond markets and the metals markets open at 20 past, so that might have been the move.
Oh yeah, that could have been it. Matter of fact, look at gold just actually snapped through that little trend line right through there.
I'll cover metals, Blake. I'll cover metals because all of them are at very critical junctures actually.
All right, good, because I don't see gold support until we get to 1240. So there
is a descending channel from the highs.
Okay, I'll let you.
Support.
I'll let you cover that here in a moment. Okay, so yeah, I won't get too far into that. But as far as like, you know, as far as the majors, like the euro dollar, I really do think that this 117.20 is pretty key resistance. Whether or not we break higher, I don't know, but I will tell you this much: if we break above 117.20 in the euro dollar, then we're going a lot higher in the euro. We're probably heading up towards, you know, 118, back to 118.50 again, to those spike highs up there. So, you know, if you're trading the euro, I think you have to just be aware of this level right here. And matter of fact, I'll just add an alert there just to be notified. The cable, I said this yesterday and I'll say it again, this is really a big resistance zone right through here. And we came up and broke, or at least tested, this big downtrend line yesterday, and we rejected it. And so I'm obviously very much paying attention to that trend line, because if we can break above this trend line and get a solid break above it, I would think eventually we're going to head above 133.20. So that's something that I'm paying very close attention to regarding the pound. The Aussie, there's nothing happening here in the Aussie and the Kiwi. But, you know, I should mention in the Aussie dollar, actually, let me stop here for a second. As far as the Aussie goes, one of the things that I think we have to be aware of is the Aussie actually is performing fairly well despite all the rhetoric that's surrounding the U.S. and China trade. You can call it dispute, war, whatever you want to call it, but it really hasn't had too negative of effect on the Aussie dollar at this point, which, you know, maybe it's already priced in to a certain extent. I don't know, and I'm not long the Aussie, but I sure as hell will be watching it closely, because if for some reason, you know, we get into some negotiations with China versus, you know, spitting spitballs back and forth to each other, but we get into more of a negotiating type of mode with China. At that point in time, I'm going to start thinking that it's time to buy the Aussie dollar. So I am not long, but I have to say it's holding up very well despite the circumstances, and that's something that I think we need to, you know, pay attention to. The Nordic currencies aren't really doing anything. You know, this dollar Canadian, I'll tell you, this thing is so damn strong, and if you don't know why it's so strong, it's because we're outside of this weekly triangle. I have been wanting to buy the dollar Canadian on any dip that I could find down towards 132. Obviously, that has been non-existent. You know, we're just not getting any dips, and the longer we sit up here with the dollar Canadian, the more frustrated shorts are going to get, and the more likely we are to press higher. So,
and add to that, Blake, that we had a big jump in crude, and that also wasn't enough to push USD CAD lower, right?
Yeah, I mean, crude had a really good recovery at the end of last week, and it, you know, yeah, the dollar Canadian actually showed a reversal candle on Friday, but we had zero follow through. So, you know, anybody who's short the dollar Canadian is obviously very frustrated, and we're building pressure for a potential squeeze. So, and the only thing I want to do with the dollar Canadian is buy it. So in other words, I want to sell Canadian dollars. I have not done that since the initial trade early last week of being long through here. I've not gotten long again, but you know, it's definitely on my radar, because if we you know, if the longer it doesn't go down, the more likely it is to move higher. Anyway, so just a few things that are on my radar today. How you doing today, Steve?
I'm good. You want to hear, since every single day we talk a couple of minutes about World Cup, you want to hear the day's joke about the World Cup, which is actually not a joke, it's true.
Okay, let's hear it.
There is a reporter asking Pelé, I guess everybody knows Pelé, right?
No, I don't.
You're kidding me. You really? One of the most famous Brazilian footballers of all times, actually.
Who?
Pelé.
Oh, Pele. Oh, yeah, yes, of course.
Yeah, whatever. Yeah,
yeah. Okay, so sorry, it's just a pronunciation. Yeah. Okay.
Yeah. Obviously, yeah. So, you know, there is a reporter asking him, like, you know, if he thinks that the team of Brazil from the 1970s, by the way, from those that don't know, Brazil won the 1970s World Cup in Mexico, and undefeated, actually. I mean, it won every single game it participated, from qualifying to, you know, to the final. And it was considered, you know, one of the best World Cup teams ever. I mean, it wasn't only Pelé, it was Jairzinho, Rivelino, Tostão, etc. I mean, they had an amazing team. So the reporter is asking him, do you think that team could have won today's Argentina? So he's like, yes, for sure. So the reporter is asking him, how much? And he's like, 1-0. And, you know, the reporter is like, only 1-0? And he's like, you know, the vast majority of us are around 75 years old.
That's pretty funny.
Yeah.
That's a good one.
Yeah.
That is funny, actually. Anyway, well, that's some good World Cup humor, and yeah, Pele, one of the best, one of the greatest footballers of all time, right?
Yeah. I mean, up until Maradona came, he was considered undisputed, the best ever. Then, there was a big debate, like, was it Maradona or him, better player? And then, we got Messi and Ronaldo. So now the debate has broadened.
Right, of course. Well, is Argentina's playing today, right?
And not only they're playing, but they either win or goodbye.
Yeah, this is an elimination. Well,
yeah. They play against Nigeria in what is it? I think 5.5 hours, exactly 5.5 hours from now.
Wow. So that definitely means that they
could get stopped out, huh, Steve?
they could.
Yeah, the stop loss is very close to market price.
Yeah, but they're trailing at the top rate.
Right. Yeah, exactly.
All right, guys.
Okay.
Well, hey, have a great session, and good luck today if you guys are betting on some football games, because you're probably going to get more action than you're going to get here in the FX market. So good luck, everybody.
Okay, see you later, Blake. We have quite a lot of things to talk about. So
thanks, guys.
Let's start with the metals, because actually this is metals and risk are the two subjects I actually mostly wanted to focus today. The reason being is, let's go through the metals first. This is gold. As you see, we are now approaching this descending channel support. There was also some horizontal support area here. So I think, that if we actually break lower from there, then 1237 is the next stop. And, obviously, gold doesn't look good at all. I mean, we said it when we were actually crafting this. We said that if we break below here, things are not going to be looking good. And you see that it's been a waterfall since we only had a single positive day since that, huge long black candle lower. So, this is definitely a market that doesn't look good. But at the same time, silver is actually, as we're speaking, testing confluence of supports as well. Needless to say how important this trend line is. You can see this is a trend line that dates back since before 2016. It's the trend line support of this symmetrical triangle. So, a break below here is definitely going to be a very, very bearish development for silver. And it's not only gold and silver. If we go to platinum, platinum is once again striving to hold this support, but it still looks very, very heavy. RSI is also looking very, very heavy. So platinum is, barely holding this confluence of supports. And it's also palladium. We had talked about that. I was mentioning that this channel higher looked like a corrective move, and we might have gotten one more move to the downside. And as you see, not only that transpired, but we're also currently about to break below this long-term ascending trend line support. So, palladium also doesn't look good at all. If we go to copper, we can also mention here that we had a false break higher that was looking like it's going to, unfold one more leg to the upside for copper, but then copper just collapsed and came back within this range and is now also approaching like a very critical area of support, the 294. So in general, metals look, look like they're being in a very bad spot, and the vast majority of them are actually right on or very, very close to critical support zones that if we break below them, there is, the likelihood is very, very high that we're actually going to see some acceleration to the downside. So, it is what it is. For a long period of time, they were looking like they would be finally breaking to the upside, and now we're exactly at the opposite position. They're looking like they're going to be breaking to the downside. So, of course, you need to remain a little bit patient, but it doesn't look good where we stand at the moment. Obviously, the reward to risk ratio, if you want to be long, you know very well where you're wrong. So, you have to risk very little. But if these moves do take place, I would either be short, which I'm not going to short them. I've said that before, or I would just get out of the way because, as I said, it's going to be very dangerous holding them. Now, we were talking about risk yesterday, saying that okay, the move lower, so far is looking corrective, and for me to start thinking otherwise, I would need to see some kind of an acceleration And obviously the 2740 level was 2735 to 2740, that little range there was very, very critical. And actually that's exactly what happened yesterday. I mean, the market proved to us that, you know, it had some, you know, it had the potential to actually accelerate lower, because that's exactly what it did. It cleared through some supports. It pared back some of the losses, you know, near the end of the day, but still I have to say that yesterday's candle is quite a bearish one and opens up, you know, several possibilities having to do with how we're going to be moving from this point on. One thing is for sure, the next area to look for is 2690. I said yesterday that's more or less the zone where we got supported yesterday. I actually wrote in the chat room yesterday when we were testing this confluence of supports that you see here. I wrote, you know, that this is a very critical zone and we're currently testing it, and then we actually sliced through it. So, you know, that's not a good signal for the bulls, right? Not a good signal at all, especially if we break below this zone here. I do believe that we're going to see more weakness. So, you know, that's going to be the ultimate proof that there is more downside coming. Now, if we look at the rest of the indices, yesterday I was mentioning that, you know, the Nasdaq was actually breaking below this ascending wedge within likely a bigger ascending wedge, and if that was the case, we would at least see you know, a pullback to retest the bigger wedges support, and as it seems we are on our way for that. I don't need to cover the Russell because actually I saw that in his introduction, Dale did that, just that, and he was absolutely right in what he said. I mean, that looked like an exhaustive gap higher, and you know, since then we've got like 3 black candles, and today's especially like just like left a gap behind it, and it doesn't seem like it wants to pull back there. So definitely a very bearish signal as well. We said it yesterday anyhow that, you know, if that was the top, we can easily see a pullback down towards this broken trend line resistance, might act as support from this point on. So, you know, that doesn't look good as well. We've already covered the fact that the DAX has created already a double top that is targeting down towards the 12,100 area, and same deal with the FTSE. The FTSE actually yesterday almost reached the equality target, you know, like you know, A equals C. That would have been at 74.82. We made it to 74.89. So yeah, you can call that a close call. Regardless, as long as we remain below this 75.85 area, you know, we can still have more downside from here. So, you know, doesn't necessarily mean that you know, the move lower is done, but for sure, you know, getting so close to the to that level, you know, it would turn me somewhat more cautious. I mean, I would rather be short the US indices than the FTSE now that we came close to the target. So, you know, metals and risk assets, I think, you know, the big movers and the ones that's worth noticing more at the moment. But at the same time, we shouldn't forget, we've seen this chart multiple times. This is the 10-year treasury. We were talking about the potential for another push to the upside after coming down and retesting these broken wedges, resistance and support. And so far, this is what's happening. We're now breaking above the 120 area of support resistance. So why not? I mean, you know, the market might play ball and might actually, you know, give us one more high from here as we were looking for. So, you know, it's on its way. The Bund, on the other hand, you know, the Bund is a more tricky market. You can see what's happening here. We got that huge move higher. Then we got the ECB that surprised. We got a big pullback afterwards that found support at the 78.6. Now we get another move to the upside. It's currently stalling. It has already stalled like for 3-4 days at the 61.8. Bottom line, this looks like some kind of a consolidation within a larger consolidation. If I zoom out, you can see that, you know, the bunds have been in a very, very wild uptrend for years, right? You can see since the financial crisis, and this has been like some kind of a prolonged long-term consolidation, which makes sense after such a strong uptrend. I mean, the market would need, you know, a decent amount of time to form some kind of a correction, because so far this looks like a corrected move. So I have to say that, you know, bunds quite more mixed than the treasuries are at the moment. So I wouldn't actually be putting my money here. I would rather trade the treasuries. Regardless, what I was drawing some days ago is the possibility that this is going to be some kind of a consolidation within the larger consolidation. If we end up indeed getting rejected from the 61.8, the chances for something like that will increase. Another pullback, perhaps that will find again support at the 61 or at the 78.6 of the last move higher, etc., until this you know, gets resolved somehow. Now, let's go back to the FX world. I heard that Blake spoke a little bit. I mean, he covered the cable, he covered the euro. I have nothing much to add to that. But what I can talk about is, oh, by the way, before I switch to that, because we had a question yesterday and I see we have it today as well, a question about the Nifty. What I have to say about the Nifty is that, you know, I don't have something to add about the Nifty, just look at it. I mean, the Nifty is still within a triangle, right? You can see it here. I think that there are, you know, good chances that this is going to be resolved to the upside and will push to new highs. But regardless, you know, we have something like a triangle here, so you can keep monitoring it until we break out. I think that, you know, keeping some kind of a bullish bias makes sense so far. But you know, it's still within a consolidation, so you need to remain more patient. I know that this hasn't been an easy market to trade lately, but you know, it is what it is. I mean, we can't force a market to do what we would like it to do. It's going to do what it wants to do, and what we can do is just, you know, read the price action and, you know, take action whenever, you know, it's actually, you know, clean and clear enough, and, you know, provides a good potential for some good moves to unfold. Now, he very briefly covered the Aussie and the Kiwi. I have to say about the Aussie and the Kiwi that I do respect, you know, the big move higher that we had on Friday. But on the other hand, I also have to respect the fact that, you know, this new low came after breaking some kind of a bear flag. And as long as we remain below the 75 cents area, I would not be buying the Aussie. The situation with the Kiwi is not the same, but it's more or less equivalent. Why? Because we had a pennant here. We broke below. We actually formed some kind of a morning star formation on Friday, but we're about to invalidate that. And definitely, if we end up closing below, let's say 68.50 on a daily closing basis, I think there is more downside coming for the Kiwi. So, you know, I maintain a bearish bias for those two until or unless they prove otherwise. So I'm not even neutral. I mean, I'm actually, you know, bearish. Same deal with the Aussie yen. You can see the Aussie yen, it broke below. You can call this a bear flag as well. Anyhow, an ascending channel support. It came back, it retested it. It seems to be at the lows once again. If it fails from here, I think there is more downside. Same deal with the Kiwi yen. As you see, Kiwi yen once again below the 76 cent zone. The previous time, actually, we rebounded. I didn't actually expect that. That was like a, you know, a false break lower, but I don't think we can have a second one coming up. So, you know, as long as we remain below 76 cents, I would also be looking lower here, and I would definitely keep looking lower. I had said since a couple of weeks ago that, you know, one of my favorite shorts is definitely the CAD yen. You can see why, right? Impulsive move lower, which broke below a long-term pattern, then a corrective move higher, which is clearly channeled, and now we've broken below this once again. So why not even accelerate lower and, you know, penetrate through the previous low at 80.50? So I do think that CAD yen still looks, you know, one of the most promising from a technical perspective yen sorts. why are the metals so weak and crypto outside reality? Robert, what do you mean and crypto outside reality? Okay, I get the first part of the question. Why are the metals so weak? I don't really get the question about crypto outside reality. By the way, speaking of that, let's have a look at the cryptos.
Depends on what people think the reality of cryptos is. You know, there's some people think it's worth nothing. Some people think it's worth hundreds of thousands. So that's a very tough question, isn't it?
No, I mean, I don't understand. I can't interpret his question meaning, does he mean that they are outside reality, or you know, I mean, I can interpret it both ways. So anyhow, if you can, regardless, I can tell you one thing about cryptos. Cryptos look very, very sick at the moment. I mean, let's take Bitcoin. Bitcoin is like toying around with a very, very critical area of resistance that turns support. You know, there's a pocket of thin air below there. So, you know, very, very bad news if it actually breaks below here. And Ethereum is approaching an equivalent level, which for Ethereum is, in my opinion, is the 400 area. Definitely, they look like they are very, very heavy. And, you know, I don't see them having some kind of a technical indication that they might be bouncing higher from here. So, and especially, you also need to consider here what the psychology is. I mean, we know that the vast majority of the accounts made in, for buying cryptos were when roughly the Bitcoin was trading from 15,000 and above. So you can understand that the vast majority of the people that got involved are seriously out of the money right now. And
Steve,
yes,
Robert is actually saying crypto above 6,000. Where's the value? Makes no sense. You know, it's.
Yeah, I agree with you. I agree
as well. You know, it's.
Yeah, I mean, there's no intrinsic value. There are a lot of questions here. Personally, although they're extremely oversold, I mean, they're like 70, 75, 80% below their highs, depends on which crypto we're talking about. I still consider them very expensive. In all honesty, I still consider them very, 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 very expensive. I mean, why is one Bitcoin worth 6,000 roughly at the moment, and 1 ounce of gold is worth, less than 1.3K? I mean, one of them is a metal, is a commodity, is a metal that has specific physical values, usage, etc., etc., and it has acted as a store of value since 5,000 years ago. So, and the other one, it's, you know, it has zero intrinsic value. We can see a lot of problems with cryptos, a lot of uncertainty about their future. Personally, you know, I would get 1 ounce of gold over 1 Bitcoin any day of the week, right? But that's my personal point of view. On the other hand, that doesn't skew my ability to do technical analysis on them, because what I'm doing, I mean, my job is not to do some kind of macro analysis on them, is to do technical analysis. And I can tell you from a technical analysis perspective, and regardless of my personal point of view, I see that they're in serious trouble. I mean, they just fail to bounce from anywhere. And if they actually break through, you know, roughly current levels, I can see them depreciating even faster than they have been recently. So, you know, this is something to definitely take into account. Let me see what other questions we have. USD, yeah, actually, I was thinking of you today, mate. I think you've asked in the past. I was thinking of you because I was having a look at the USD ZAR earlier. If you remember, I said that the first area of support is the 1340. That's actually where we found support yesterday by actually posting a piercing line candlestick, right? So 1340 has acted as a first line of defense. Now, if you're asking me if I think that the move lower is done at 1340, probably not. So despite this nice rebound from here, I do think that, you know, USD ZAR should depreciate further from here. Question about the Euro crosses. Let's go ahead and have a look at them. All of them, actually. Euro Aussie, Euro Kiwi, Euro CAD. So Euro Aussie is striving once again with this area of resistance. Let's also fib it. There it is. Okay, so as you see, we're depends. If you take that high, we're actually at the 61.8, some horizontal area of resistance as well. I would still doubt that this move higher is the first leg of another move that will take us to new highs. So I would still be looking for at least one more move lower before higher. Same deal with the Euro Kiwi, although as I've said, Euro Kiwi, perhaps it's going to create some kind of a reaction from there. Although, as I've said, Euro Kiwi is less clear from a technical perspective than the Euro Aussie. So, you know, I would rather trade the other one. Oh, I forgot EuroCAD, by the way. EuroCAD has also penetrated through this trend line once again, but I would still be monitoring this, right? As, whoop, let's clone this. Okay, currently at resistance, as you see. I would still be expecting that we might see one more leg to the downside for EuroCAD as well. Something like that, okay? Whoop. So let me see what other questions we have. Yeah, blockchain, you know something? Blockchain, I'm not saying that blockchain is going to go away. I think that humanity might find very useful applications from blockchain, but I have no doubt that the vast majority of the cryptocurrencies are going away. They're going to completely disappear, and some of them might survive, but I doubt that the valuations are going to be what they are at the moment. Perhaps they will be able to sustain those valuations if the vast majority of them disappears and only a few of them remain, right? I have a question about the Aussie Kiwi. I think that the Aussie Kiwi is quite mixed. You can see why. First of all, if we're talking about longer term, as you see, the Aussie Kiwi is within a symmetrical triangle. So longer term, you can see the symmetrical triangle here. Actually, you know, something we can completely get rid of this. You can see it here very clear, right? This symmetrical triangle. So from that perspective, we are within a symmetrical triangle. I wouldn't be taking any long-term positions. Now, on the other hand, you know, we had a move lower, which was expected. We were expecting it because we saw this ascending wedge here. So once it broke down, you know, we were looking for some kind of an extension lower. I still tend to believe that as long as we remain below 108, we might have at least one more leg to the downside. Right. But I would be less convinced than I was, for example, when we saw that breakdown from this ascending wedge. So I wouldn't be trading it, you know, from current levels. I also see this RSI trend line breaking to the upside. So, you know, I maintain somewhat of a bearish bias as long as we remain below 108. But, you know, my conviction is not that high because we might be in some kind of a complex consolidation within the symmetrical triangle. So, you know, who cares? I mean, better opportunities out there, cleaner setups. So, you know, the good thing about FX is, you know, you have so many options. Why get stuck in something that doesn't feel that good? You know what I mean? Crude, let's have a look at it. I showed it yesterday. To be honest, not much has changed since yesterday. Obviously, we're seeing some kind of a pullback. I mean, yesterday and today we're consolidating. Makes sense because the move that we had on Friday was a huge one, and it found resistance at the 61.8. But I think that such a huge white candle as the one we got on Friday, I don't think that's the end of the move higher, right? So I said yesterday that 67.15 might act as support. So I would be watching that. As long as we remain above there, I would be looking for higher levels, right? That might end up being some kind of longer term consolidation though. I wouldn't rule out some kind of a triangle, right? You can see it here. You can extend that trend line. You can see it here. So why not? This might prove to be some kind of a consolidation, right? So many scenarios at play here because obviously crude is overextended. It made it from $26 in 2016 up to $73. It finally, posted some kind of a correction lower, but this corrective move, as I said, might still be unfolding. So this might end up being a triangle. So I think we need to be more patient here in crude before we can call it the end of the correction and the resumption to new highs. But I do believe one way or another that crude looks bullish. So sooner or later, it should get resolved to the upside, right? So I'm going through questions to see if there's something we haven't covered. Okay, Euro yen and pound yen, actually. Pound yen, still weak, still trading below this broken long-term formation. You can see it here with the blue trend lines. As long as that's the case, I have to maintain a bearish bias, right? This might be a triangle here, we'll see. But as long as we trade below this broken trend line support, we can expect it to act as resistance. Even if we jump once again from here, this might end up being like some kind of an ABC, right? And we might see a move lower. Regardless, I will maintain a bearish bias as long as this is the case here. So I'm looking at the longer term formation, and I do think that it looks good, for producing more downside. And let's have a look at the euro yen as well. I said it yesterday. Euro yen, first of all, you need to respect the potential for more downside as long as it remains confined within this descending channel. On the other hand, I have to take into account that this was like an A, B, C equality target from here to there, right? So I was short. That was a very good trade last month, but especially after this V-shaped recovery here, I would be quite careful. I wouldn't be actually shorting the euro yen. I would rather get involved with something else, because if we do break out from this channel, might produce some nice follow through. That's it. But we might see an extension lower as long as this channel is holding. Why not even towards the 61.8? So we're currently in the middle of this channel. I think it's a mixed bag. I would just stay away from it at the moment. Let me show you USD yen, because obviously this will have to do a lot with what's happening. Once again, I'm a little bit unfazed with USD yen. The reason being, we had a nice ascending wedge. We broke below it. We seemed like we would have some nice momentum to the downside, but we found support at 108. We rebounded. This created another ascending wedge. We're breaking below it once again, but the downside momentum is actually lacking. So, for me to feel more comfortable about the potential downside for all the yen crosses, I would really need to see some kind of an acceleration from here, something that will tell me that yep, this is this is actually an important technical break, and it should lead to more weakness. For the time being, the yen is holding up. The USD yen is holding up quite nicely, even when USD is showing weakness against the rest of the currencies. It remains decently supported against the yen. Considering especially the huge move that we had yesterday in the risk lower, just look at yesterday's candlestick in USD yen. It was almost neutral, right? It was like a spinning top, despite having very strong moves to the downside. So this kind of troubles me. Dale, it's interview time.
Yes, sir. It is.
Perfect. So enjoy the interview, and I'll see you again
Steve.
tomorrow.
Enjoy the games today.
Oh, thank you. I'm going to definitely watch Argentina.
I'll
with
be
Nigeria.
watching
The
it.
vast majority of yeah. I think it's going to be a very interesting game.
Okay, buddy. Wear your Pampers.
Okay.
Steve Anton, my trading warrior brother. Welcome back to Face for the third time. Passing you you are now the presenter. Looking forward to hearing your voice, my trading warrior brother.
Can you hear me?
Yeah, Steve, how are you, bro?
I'm good. You?
Good. It's thanks so much for coming back. I think it's your third interview with me.
Yeah, 3 times.
Yeah, that 3 drives to a top, huh? 3 drives to a bottom. But you know,
Yeah.
Steve, you know, in all seriousness, you're one of our most popular guests in terms of views that you get on your interviews in the entire history of FACE interviews.
Thank you. Oh,
Which is the entire history is about 1.5 years.
nice.
And no, really, more views than Jim Rickards, famous guys, you know, famous guys. You have quite the following. And you know what? People don't follow guys if they don't know what they're doing, because it doesn't take long for the markets to show somebody's incompetence if they are. So, you know, congratulations on that, buddy.
Oh, thank you, Dale.
So, what's on the radar? Is the energy complex one of your favorite areas to trade? Because when I do see your tweets, it seems like there's a lot in natural gas and crude, and or do you just go wherever the opportunity is?
I go wherever the opportunity is. You know, crude had those nice swings. I like volatility, right?
Yeah.
And I like to.
Maybe I should show my screen. Are you going to be sharing your screen at all?
Oh, I don't know what you want me to show.
Okay. I don't know. Maybe we talk about a few things you're looking at technically, but otherwise I could put my screen up and we could just.
Oh, here you go. Okay.
Okay.
Here's crude.
Oh, okay. Yeah. You know, it's great to see somebody's setup and, you know, what they use. So that's an interesting setup. The yellow bands, is it some type of Bollinger Band, Steve?
Yeah, it's something that I created with one of my programmers that looks at a lot of stuff.
Okay.
I don't like to share that, but
yeah, it's proprietary for you. Okay.
Yeah, the pivots I map out myself, which I'm going to be doing a course on how to basically map them out. They're not the pivots that come with your trading platform. These are mapped out pivots that took me quite a bit of time to actually figure it out, but they work very, very well with my trading, and a lot of people like them, and a lot of people use my charts with their trading. It steers them in the right direction, but you know, you have to know what you're doing, though. They're levels of defined risk. They're levels, they're areas where it's very defined, where you could, you know, take an entry, or you can do a short. They're very controlled areas, and those are the areas that I look for. So
well, your handle says it, you know, pivot king. So I know that pivots were kind of the mainstay of your work. So for example, I'm not going to ask you for a forecast on crude, but with your work, what would you say your average risk is on, say, a crude trade?
Oh, I've done well with crudes. Since the 40s, we've been buying the dips, but recently we rolled it to, I had a 74 target. I got hit like $1.75. Basically was buying a falling knife, but I controlled my trade, and that's where the pivots come in. And because crude's wild, right?
I'd like, you know, I'm leaning towards shorting the crude up above the candle that you have up there with your blue line and where the yellow builds up. I'd like to see it take out Friday's high and perhaps fail. The only reason I'm saying it is because of what happened Friday. A lot of the crude bulls are saying, you know, your dream of being able to buy crude at 61 is a dream. And I don't know if it's such a dream. If, you know, we put in a lower high here and get something like we had a month ago, it would take it there.
Well, I just go by the charts. If we get a close above 69, the 74.67 is very high probability you'll get hit.
Okay.
So if it stays under this line in the sand, and
Right.
it breaks this 63.39, let's say you get a close under here,
Yeah.
you're probably going to get a waterfall. But
Okay.
crude's
So
bullish.
those are your two areas. You know, either it proves itself to the upside, and it would have to break quite a lot for you to turn negative on it again.
That's right, but crude is bullish. So
Yeah.
you get a lot of people shorting from 55, 52.
Yeah.
You know, the commercials are the longest short position ever. Well, you know, they could be short for 6 months. You know,
Yeah,
a
they
lot of
could.
people,
Yeah, they have. Do you think
have
they
money to
have
withstand.
deeper pockets than you and me, don't they?
I remember in gold, I remember, no, it was silver, a long time ago, maybe what, 5, 6 years ago, 5 years ago. I remember they were saying the commercials are net short, break longest ever, net short. I don't know if you remember this. Commercials, it was $18. Oh, they're net short, huge. It went to $50.
Yeah.
You know what I mean?
Yeah,
So,
sure. Yeah, I mean,
I
you
don't
know,
really follow that. That's all noise to me. I don't, you know, it's a piece of information, Dale. Those
right.
reports, the COB report, I tend to look at block trades a lot.
How do you find those?
I had a friend who's going to be an analyst on my site who introduced me to them, and they're mapped on a chart. Like, I'll show you the crude block.
Okay.
It was, here, let me show you this.
So does he get that? He get that stuff from a broker's like dealing deck or something like that to know where the orders are? Block trades?
He mapped it out himself.
Wow.
He uses the. Here's an example. You see that block?
Yeah.
You see that big one? That's
Yeah.
on top of USO, right?
Right.
So you get that was a 1.4 million block, I think.
Yeah.
1.4 million. So no, about 1 million on here. So when you see that type of transaction right at the close, by the way, that was at 4 o'clock, and you see this the big run, and you see this big block print, and it matches one of my pivots. I like when they align. When they align, in a very high probability, it's done. Like more times than often. And there you go. From that print, right? That's the big money, right, Bill?
Yeah.
The big money knows where it's. You know,
Yeah,
they know what's going on. Well,
yeah, in the old days, there used to be these guys Steve called the So's Bandits, and they would have level 3 quotations, so they could see where the orders were.
Yeah, they're the lucky ones.
Big edge, and
We're not.
yeah. So you bring up you're going to have another analyst, so I see you're about to start a service.
Dale, it's been 19 months. I wasn't sure if I wanted even to do a site because there's so much. 19, you know that. I think since the first show, I was telling you.
Yeah, I know.
But
well, you know, you wanted to wait until you were, you know, mature enough to handle
it's a lot of work. It's a lot of work. It's a lot of work.
Yeah.
You know, I have a web design company too, and an internet marketing company. I have a lot of employees. They're the ones who are pushing me too, and just people that I deal with every day, traders, are telling me like, Steve, I really like your stuff and I want to learn. I've said, you know what, let's do it. Let's just have a community where everybody can share information. That's what the best traders is, Doc. My site's going to be more of a community of traders just exchanging information.
Yeah, that's
that's all I'm looking for.
I'm very bullish that model. You know how I feel about intelligence gathering, and you know what? As good as you are, Steve, you still only have 2 eyes. And once you get this community going, you know how many people will bring your attention to something you weren't even looking at.
Absolutely, and I can learn from them too. Like I always love to learn. There's always something new out there.
It never stops.
It never stops.
Yeah.
It doesn't. But you know, yeah, I love trading. I love. I think I don't even trade a lot though, Dale. Like I wait for setup. Like having my own site too. Like honestly, I would waste 10 hours without even doing a trade. Like how can you stay at a computer and just watch screens for 10 hours? That's why I'm on Twitter. I used to do 30 tweets a day. like, what else are you gonna do? So I just sit and I wait.
Yeah.
You know, and when it comes,
we're paid to wait.
you're paid to wait. So, you know, having like my own site with my own community, it buys your time, you know. And I got my life training too now.
Yeah, you know, I remember feeling the pressure of, you know, running trading rooms and something that, you know, I had to come up with ideas to entertain the crowd. And I finally came to the conclusion that, you know what, I'd rather bore the people than force an issue. And I'm also not afraid to say, I don't know. And during the I don't know phase, you know, when the market's revealing itself, eventually you'll know. But yeah, a lot of guys that have services feel the pressure to entertain and come up with trading ideas all the time. And there just aren't great trades all the time. Sure, you could look at a 5-minute chart and find something to do, but then you just make your broker rich.
True. Yeah, I used to overtrade like years ago. I don't, you can, but it's just more stressful. It's much better to just wait. And that's what I tell everybody. You know, you wait for the trigger, you wait for areas that are, you know, very defined, like my pivots. And I just use them. I use them. They work for me. And I keep things simple. Dale, I used to be very complicated with my charts. I tried every indicator you could possibly imagine. And, you know, I like to keep things simple. I really do. And, you know, some charts I see these people put, I don't know how they read them. I don't know. I see like hundreds of different levels, lines going all over the place. I don't know. I don't know. I can't. I can't read. I don't know. I just like to.
Yeah, when I look at those, it's like a flashback on a bad acid trip.
Yeah, it's like it could be any of these levels, and you look at the levels, and there's like 50 levels there. You know what I mean? It's like, okay, you know, I just like it simple. These are the areas. You know, works for me. Like, look at this chart, like with oil. Like, there you go. Look, I got defended. You know. So what if you put a short here? You can make right there. It's 60 cents. 60 cents in oil is huge. So you put a short at the L pivot. It goes against it. You move your stop to entry. If it goes back up, you get stop to entry. See, a lot of these people, when I was on Twitter, I'm going to tell you something, Dale. I used to see all these guys. I'm taking this. I'm doing this. I'm doing this. And I remember I started doing some trades. I'm like, moving to entry. And all of a sudden, I started seeing all these accounts start saying, I'm moving to entry. I'm moving to entry. I'm like, I wonder where these guys got moving to entry from.
Yeah. There's a lot of plagiarism in the business, but you know what? I found that. I'm
not saying I'm the only one that moves to entry. No, I've dealt with experienced traders that even help me, but.
Yeah,
that's
no one can copy. No one can learn what you do off Twitter. They have to spend time with you.
Absolutely. Well, just anybody.
They could try. They could try.
Yeah,
my belief is, and you know, I've talked to a lot of guys. I don't know if I ever asked you this question, but you know, I asked people, well, how long did it take for you to finally really get it and become consistent? And my average answer is about 4 years. And during that time, they paid Ivy League, a lot have paid Ivy League tuitions to Mr. Market. So, you know, you either pay to learn or you pay Mr. Market. So, you know,
I lost a lot. I lost a lot. But I have success. If it wasn't for my extra income and my real estate, because I own 2 apartment buildings with 2 of my brothers, and they're big. One's 100 unit and the other one's 110. So that's a good income coming in too.
Yeah.
If I didn't have that, I even went to the hospital the first time I blew my account. I blew my account twice, and that's how you learn. That's what I tell everybody. You can't learn trading from something. You can learn. You can get the kind of. You have to spend so much time. I've spent I don't know how many hours looking at these charts. Like, you have to love it. Thousands of hours and stress.
Yeah, you can't teach experience.
No way.
It only happens with the passing of time.
Well, look at these algos. You know that, like a move. You think you're in a move. Oh, look, it's going, and all of a sudden it goes back down, back up. You got to know these markets. They're so tricky, and that's why I prefer going in and out. Dale, I don't like holding a trade. I find that back in the past when I was holding a trade, you know, it's good to trail your stops, but when you trail your stops, these algos, depending on what you're trading, like if you're trading natural gas,
yeah,
you know, 80% moves top, 20s, oh, they're going to pick you off.
Yeah,
I don't recommend that for anybody, even oil. Even
you know
oil.
what, you bringing up real estate, Steve, it makes me think of one of your interviews in the past where you said you thought Toronto real estate was peaking and it was going to come under pressure, and man, that was spot on, man.
Man, I know.
You know?
Yeah, I did.
Did you have a chart on that?
You know what? I was going to short the banks, but I didn't end up doing it. Yeah, I saw the peak there. I actually called it.
You did.
Yeah. But you know, I was going to sell. The apartment buildings are different. Is different area.
Cash flow. Yeah, than single family housing. Yeah.
But
so
we did it doubled. But anyway.
Do you have any vibe on where we're at with? I know you're a technical trader, but someone that could call the real estate market also has kind of a worldview of what's happening. I know it doesn't affect, how you're going to trade crude in the next 24 hours, but do you have some type of global view about what's happening with trade friction and, what's happening between Canada and the U.S. and
I think my honest opinion.
Yeah.
I think there's so much bad news that we're probably going to go to. I might be wrong because I like to follow charts, but if I were a guessing man, I'd say we're going to go to new highs.
In what? The stock market?
The stock market. I think it's going to do the new highs for the midterm elections. After the midterm elections, a disaster. That's my opinion.
Okay.
I think Trump's going to have a helping hand in the market for the midterms. I really do. I think he's already having it.
Okay.
Dale, you know as well as I know. If they want to keep this market up, they can. All you got to take is a couple phone calls, me, you, a couple of hedge funds. All you need is 3 or 4 of them. Whatever they do, everybody will follow. If they don't, that's it. They run the show.
They do. So
they can make a crash tomorrow. You know that.
Yeah. So
they just pick up a couple phones. That's what they do, and they say, okay, what time you want to dump it? 12 o'clock. Okay, start dumping. And that's it.
Is that why you prefer things like FX markets, because they're so large that they're harder to manipulate?
That's for sure. They're way harder to manipulate.
Okay. All right.
I think there's a lot of money in there. There's trillions of dollars in there. But yeah, these markets, natural gas is easy to manipulate. Gold, you know that.
Yeah. You like the metals?
I like the metals, but it's been choppy. Like gold's been hard. Like if you've been looking at gold, it's been choppy for a year.
Yeah.
That's why these markets. That's why I like going Dale in and out. I'm telling you, you got a market that's range bound. A lot of these guys buy, they hold. What money have you made?
Yeah, you're right.
Nothing.
I encourage at least partial profits. At least take partials, right?
Yeah, it's always take partials.
Yeah.
But these markets, I'm telling you, I'd say in a couple of years, there's going to be more retail coming out. The bots are already running it, and it's getting worse. Like since 2 years ago or last, the moves are quicker.
Yeah.
It's getting tougher. Like honestly, I find it getting tougher and tougher.
Okay.
Bigger moves, faster moves.
Yeah.
It's going to be all bots. It's a hard.
Yeah.
You know what I mean, Bill? So I don't know. I find that that's why waiting patiently, just let them fight, let the bots fight, and wait for you know, I called a washout on gold last week. I said, close. I gave 1266 as the target. No one believed it.
Yeah, I know. Anytime you talk about it,
and it came.
I know. Yeah.
You know.
I know. People don't like, you know, there aren't a lot of gold bears out there. So, yeah, people don't like to think that, you know, in this environment, gold could go lower. So, I understand that.
Dale, I think the gold bulls I think they're done. I think they're broke.
Yeah,
look,
you think
look how many people were long gold. And I'm going to tell you, I see 5 years ago, I used to sign up to a service. It was $500 a month. People maybe here might know what I'm talking about. I don't want to mention his name. Supposed to be some guru.
Yeah.
Was one of the most horrible traders I've ever seen in my life.
Yeah,
I can't even now what I know now after all those years of learning and looking back, I'm like, how could you even call those moves? Like I remember when gold was 1650 and he was looking at the physical market. Well, the physical market's different from the paper market. But yet he's trading the paper market. And
right.
It was going down every $100. And I remember he's telling everybody to hold and then buy more. Who can withstand a $100 move in futures?
Not if you're leveraged. Yeah.
Well, even
it's 100 grand.
Big.
It's 100 grand.
Yeah.
On a full size 100-ounce contract.
You need money. I don't see how this. Yeah. I'm just saying, like, a lot of these gold guys that, you know, were on those shows and webcams.
Yeah, like Peter Schiff.
They're broke.
They're always bullish gold.
They're
just
broke.
Like a lot of Bitcoin guys are always bullish Bitcoin. You have a view on crypto, Steve? Or are you skeptical? Are you embracing
I wish I shorted crypto. Dale, I said this on Twitter. The first day it got announced to the futures market.
Right, yeah.
I said short the shit out of this. Because they're putting it on there so they can make money on the short side. Yeah.
I know.
And I didn't do it. I tried it, and then I seen these $200 moves. $250, $300. I'm like, oh my God. Yeah. I can't do that in the futures market, Dale. It's too much.
Yeah.
It's too big.
Yeah, I was saying.
I was saying
when crypto was, you know, having a, you know, 5-10% moves a day, that compared to FX compared to crypto was so tame that ARP, the Association of Retired People, gave their seal of approval for senior citizens to trade FX because it was so tame compared to crypto.
Yeah, I don't know. Like, you know, I wish I should have shorted it. Dale, it was so noticeable. It's going on the futures market. They're gonna kill it. I said it. I gotta look for everybody knows who's listening now from my Twitter. I called it. I said they're gonna kill it. And
I did too.
They killed it the first day it was, remember?
Yeah.
The first day they lost their big top large.
I know. Mark Yusko said that, you know, they were going to kill the shorts. I go, I don't know. So anyway.
They're going to kill the longs.
Yeah.
20,000 Bitcoin. That's
those guys. Yeah.
Wall Street looked at that, like, honestly, because I was putting my mind in, like, I'm not a criminal, but sometimes you got to think like them. They are, you know what I mean? And when there's a lot of money there that they could have made, they were dying to put that on the futures market.
I know, because there was no shorting. There was no shorting in on the crypto exchanges. So yeah, I said I could see a bunch of floor traders salivating for this new contract. So
they loved it.
That was definitely it. So okay, so that's it for crypto. I think we've covered anything. View on the dollar, Steve? Wrap it with a view on the dollar.
Oh, I was bullish the dollar. Still bullish, actually. I have a target of, what is it, 95? 95. Yeah. The dollar was good.
You like it for a move to?
One more move. I want one more move. And
Okay.
then, hold on, where is the dollar?
That would be a third drive up there. So it's good to hear you're just looking for one more push up.
Yeah. Stop everybody else and then.
Yeah. Over that high, 95,
yeah.
30. Yeah.
That's what it's coming. They always do that too, right? You know,
yeah.
It comes right down, then back up, stops you out probably overnight. And then in the morning when you wake up, you're down. That's
well, Steve, you know, I can't wait to hear or watch your new service. I think I signed up on your page. You want to show that page for people to sign up for when you're going to be doing podcasts. Is that what you're planning to do?
Yeah, the first one's my brother.
Okay.
My brother Joe. I'm on real estate, and then the second one I have my friend of mine, Anthony, who has a hedge fund in Toronto that he's coming on.
Yeah.
He's good. He has this marijuana stock that he just did an IPO for the biggest marijuana licensed in Canada. This thing's huge. He was the IPO. Yeah. He did the IPO, and he did the IPO for Snip. I don't know if you remember Snip. It was big. Still is. Yeah. So he's a guy that's coming on, and then after that, I'm gonna have my other analyst, the block guy, come on, and I'd love to have you on.
Oh, let me know. I'd be happy to contribute, bro.
Yeah.
So
man.
just turnaround is fair play. So I know it's going to be successful, and I wish you the best, and keep spreading the good word and a dose of reality over all the hype, Steve. I'm proud to call you my trading warrior brother.
Thank you, Dale. Thank you very much. I always
good hunting.
Every time you tell me to come on, I'm always there for you.
I know,
you're
Steve.
There for me too when I call you.
I will. I promise. Okay, it's a deal.
All right.
Thanks so much, Steve. All right, bro. All right, Steve Anton. You could follow him at the Pivot King on Twitter. At the Pivot King. All right, buddy.
All right.
That's it.
Take care.
Take it easy.
Yeah.
And that's our session, everybody. Good hunting. Enjoy the soccer. See everyone tomorrow. And remember, don't just count your pips, count your blessings. Adios.